morning, Dublin. It's a pleasure to be here to unveil our 2024 Accel Euroscape. So I'm Philippe Botteri. I'm a partner with Accel. So we're a global venture firm with offices in Silicon Valley, Europe, and India. Roughly half of what we do is investing in cloud, AI, and software companies. And we can do anything from $1 million seed investment to $200 or $300 million pre-IPO rounds. So we're very excited to be here today. And we have called our report this year AI Eating Software. Well, I guess no surprise, but if you look at what happened in the past year in the world of SaaS software, we're seeing AI as the main value creation driver, both in the public and in the private market. And we're seeing that, we think AI and generative AI and the new models that have been created in the past few years are really creating a tectonic shift in technology that is basically unmatched. I mean, even if compared to what happened with cloud in 2004, 2006, when cloud was starting to happen, we saw mobile as a new platform. But I think with AI, we have something that opens the door to a set of productivity improvements in the enterprise that I think will be unprecedented. So let's start first with the public market, and we've called it the feast of the titans. No surprise here. I mean, if you look at what happened on the NASDAQ, everything looks great. I mean, the NASDAQ up 38% in the past 12 months, with $8.4 trillion of value being created. And as you can see on the chart, the NASDAQ is at very close to an all-time high. So it really looks very good. When you look at from 3,000 foot. Then when you start to dig down, where is the value being created, you realize that a lot of that value creation is very, very concentrated in 6 big tech companies that are all worth more than $1 trillion, and with Apple, Microsoft, and Nvidia now above $3 trillion. And together, these 6 companies represent 2/3 of the value that has been created in the index over the past year. And this is explained because AI is driving, as I was mentioning, an incredible set of opportunities for both consumer and the enterprise. I mean, Apple's working hard to launch small models on their iPhone and iPad and their devices. You're seeing mid-market companies like Klarna investing and getting a lot of productivity out of AI. Big companies like Coca-Cola signing very big deals with Microsoft. So kind of everybody is investing right now, try to position themselves, get advantage of this new wave of productivity and innovation. The other thing that we're seeing on the public market is there is a concentration of the more traditional software spend around very large platforms. So if you look at the companies that are north of 100 billion of market cap, so you can see the shift from the 2 or 3 trillion to 100 billion, right? That's 30 times. So it's a very big gap between this set of leading tech companies and then the set of leading software companies. So you see companies like Palo Alto, Oracle, SAP, IBM, ServiceNow, and Intuit, which very nice increase in their market cap. Others a bit less successful. Salesforce been roughly flat. I think Adobe has probably not taken the AI shift in the way that investors would have liked them to do, and that has had an impact on their market cap. And I think Shopify, obviously, it's kind of the still digestion of the post-2021 boom. So that's what's happening at a high level. Seems like big companies are growing. NASDAQ an all-time high. It feels pretty good. But then when you start to zoom down a bit deeper, there's still some clouds on the horizon. I think first from a geopolitical and macroeconomic standpoint, since are not at their best right now. We have a war in Ukraine, a war in Middle East, with the Fed trying to, guess the best rate to avoid a recession, try to do a soft landing instead of a hard landing. So companies don't know exactly where they are right now. I think that's playing a key role in terms of how they think about their software spend in particular. And if we look at just a list of the 100 public software companies, and then we see that there is some recovery, but we're still 40% down the 2021 peak, and very far to see the growth rate that we're seeing overall on the NASDAQ and for the very large companies. So clearly there is a lot of pressure on software spend at this point, and that translates in obviously lower growth rate, as we're going to talk about later, and multiple that are now starting to be below the pre-COVID average, hovering around 6 times forward revenue. So unprecedented opportunities in AI, but life in software right now is not always, can be a bit tough on the growth side. But overall at Accel, we love cloud and AI. We've been very active since our inception, invested in more than 400 companies, more than $10 billion, and we're very excited about this new wave of AI company and look forward to investing in more. We are in companies like Scale, Vercel. We invested in Europe in Synthesia, in H on the foundational model. We're also in Decagon, Emmet in India. So all over the world, we're trying to find these exceptional AI companies that are going to be part of the next revolution in tech. But now let's go deeper into the market update, and I'm going to hand it over to my partner, Rafa, who is going to tell you in more detail what we're seeing.
Thank you, Philippe. Nice to see you, everyone. It's a pleasure to be here. So now we're going to gradually lower the cruising altitude from the macro into the micro, and we're going to cover 3 main topics. Number 1, we're going to talk about what's happening with publicly traded software companies. We're then going to cover what's happening in private markets, and we'll finish with all things AI, the most exciting bit. So if you look at what's happening with publicly traded software company, well, today those software vendors face a series of pressure. Number 1, many buyers are digesting their kind of overspending from the bubble years. They're also rationalizing some of their decision, realizing that not every team needs 10 tools to do the same job. And at the same time, the macro elements that Philippe mentioned are overall slowing down purchasing decision. But I think the elephant in the room here is really how AI is pressuring those more traditional vendors. Every CEO is being asked by its boards to come up with an AI strategy, and very often that means shifting away budget that is already being allocated to existing vendor into new AI initiatives. And so, as a result, if you look at the Euroscape cloud index, well, growth has been going down every quarter since in the last 2 years. And if you just take Q4 22 to today, in early Q3, Q4 24, well, we went from 30% to 15% annual growth rate. And when you actually segment that cohort of companies, you realize that no company is growing above 30%, and in fact, most of them are in the 10 to 25% bucket. Now, obviously, that's data about publicly traded companies, but we assume that the picture is pretty similar for growth stage and pre-IPO companies, and this means that many of the unicorns of the ecosystem are still not reaching that bar to go public, which creates a bit of a backlog, and on the other side shows very little sign of reopening. That being said, the picture is not that grim everywhere. If you look at M&A activity, yes, big tech is nowhere to be seen, but overall activity remains solid. If you look at the chart, We are in line with the previous years, if not stronger, driven by acquirers that are being pretty active, like Synopsys, IBM, MasterCard, and Salesforce. And this trend is also supported by a pretty strong sponsor activity in both take privates and private buyouts. Funds like Blackstone, Permira, and Thoma Bravo are actively buying companies and looking for opportunities, which overall is a pretty healthy thing for the ecosystem. Now shifting to private markets. Well, if you look at funding, you can say that we are back, growth is back in the private ecosystem. We are 65% above the pre-COVID levels. That being said, you can clearly see that 40% of the recovery is driven by generative AI investments. And if you remove that generative AI, well, actually, we're still pretty much in line with pre-COVID levels, with Europe maintaining its historical share of market share against the US. Now, let's move to the exciting thing, generative AI. So the ecosystem raised 56 billion since 2023, which is, pretty impressive amount. And when you look at where the money is going on a geo basis, well, actually 80% of the investments are going to the US. And we'll now walk you through, how we can explain that. But first, looking at the companies, AI is really becoming a game of, strength. The bigs are getting bigger. If you just look at the top companies of each ecosystem, they amount for pretty much 2/3 of total Gen AI funding since 2023. And I'm sure you know all the companies on the slide, but as you can see in terms of the type of companies, most of them are a foundational model company. And that's true when you look at the overall value chain. Foundation models are still commanding a lion's share of generative AI funding, both in Europe and in the US. So, I won't walk you through all the names because I'm sure you know all of them. But, we're seeing pretty impressive companies also being built in Europe, such as Mistral, 11 Labs, and H. Now, we'll cover other sections of this value chain as well a bit later, but I think an important data point here is that full stack app and application funding is growing very quickly. So I think we have potential hopes to believe that these will be the main categories going forward. And now, I think if you take a step back, many people might say that we're in an AI bubble. That being said, the pace of revenue growth of some of those companies is quite unique. If you look at how OpenAI reached $3 billion in revenue, well, it took them only a handful of years versus usually 10 years for what are still considered to be the best software companies. So AI companies are, of course, raising a lot of money, but they are also growing much faster than their, than previous generation companies. And this is great for the ecosystem, both for people who are building on top of foundation model companies, as well as people who are trying to implement this model across enterprise functions. The pace of new model development is accelerating like we've never seen before in the last 3 years. And models are not only getting better, they're also expanding into new modalities. Now, if you look at performance, which is really what matters for entrepreneurs who are building on top of those models and companies who are looking to deploy them, well, models are getting better release after release. If you just take language understanding, well, OpenAI, Anthropic, and Meta are really pushing the boundaries of what was considered to be possible. And some other players like Google are really pushing the boundaries of contextual understanding, meaning the amount of information you can give to the LLM and what the LLM can process. And while one might think that this is coming at a higher cost, actually foundation model companies are doing a pretty good job at maintaining cost under control and even decreasing it over time. So just looking at OpenAI, they have done a pretty incredible job at decreasing the inference costs of their models over time. For example, ChatGPT that came out in 2023 was 90% cheaper than the current GPT-4 version. And not only the model is cheaper, it's also twice as fast and can have 5 times more contextual understanding. And so this is really leading to the division of the world into kind of 3 main buckets. On one side, we have tech titans that are spending tens of billions in CapEx, but also in direct investment, because if you remember this foundation model company I talked about, well, a lot of them raised huge rounds with those players as well. On the other side, you have AI majors that are spending billions a year to stay ahead of the curve, OpenAI, Anthropic, and the newcomer, XAI. And then you have the AI challengers, which are spending hundreds of millions a year, like Mistral, H, Magic, Pulside, and a few others.
And just maybe to comment on that, I think when you look at this chart, naturally you will tend to say, well, I know who is going to win this race. Right? Companies spending tens of billions versus companies spending 100 millions. Why bother? And I don't think that we share this view, because the biggest model are not we don't see the biggest model as winning everything. I mean, if you look at a lot of the applications, they're dependent on costs. So inference costs, and they are dependent on speed, which is latency. So far, a lot of the applications have been human-driven, meaning like you put a prompt into a model, you wait, you get a prompt. I mean, human can wait a second to get an answer. That's not a problem. So for the current wave of application, you would say, yeah, the better the answer, the greatest. We don't really see the inference cost. It's human speed, so the bill doesn't rack up. OpenAI is diminishing their inference cost anyway. So that seems good. But if you look at what's going to happen tomorrow with a huge move toward agentic automation, that means that suddenly you're automating tasks in the enterprise, which are machine-to-machine tasks. And that's where the number is much higher, inference cost is super important, and latency is going to be very important. And so we think that in this world, having smaller, more focused models can actually be a lot more efficient. And we think that's where this league of AI challenger can really make a difference. But time will tell.
And so we already talked about how those companies are, being fueled by unprecedented revenue growth. We also believe that, this craze is justified by the value that AI is already delivering across enterprises. And we've done some research and identified 4 main use cases across software engineering, customer service, productivity, and media creation, where some of the biggest companies of the world today are already deploying AI into real-life use cases and are already delivering value. I invite you to, for example, watch the masterpiece ads that Coca-Cola created with DALL-E, where they have some of the most beautiful painting of in the world, coming to life with people drinking a Coca-Cola can, and it's really nice to see it in action. And as mentioned, we believe this innovation and the fact that models are improving and costs are going down is really going to fuel an interesting wave of innovation at the application level. And we are seeing many applications going after core enterprise functions as well as key industry verticals being created and reaching pretty interesting revenue growth in a short amount of time. I think, here notable companies are things like Emmet in sales, 11x as well, but we're also seeing Landoc helping companies manage their internal knowledge, as well as Gamma, which is a tool that one can use to create presentation. We didn't use it today, but you should try it. The results are pretty unique. And then when it comes to industry verticals, well, I think the interesting companies here are, or at least the ones I know well, are the ones that are going after legal. A profession that is, hampered by manual process across the entire value chain. And companies like Harvey, Leia, and Deep Judge, as well as LegalFly, are really going in and helping lawyers deliver faster value to their customer much faster, which will potentially change their kind of revenue model as they tend to charge on time spent on task. So we'll see what will happen. But now it's the moment we unveil our Euroscape 100 list. So these are, these are 100 companies that have been handpicked by the Accel team for the quality of the product they're building, the quality of the customer feedback they're receiving, and the overall momentum they're reaching from a revenue perspective. But first, before diving into the list, I think it's important to congratulate our graduates from last year. So these are companies that were in the Euroscape 100 and became unicorns. So we don't include companies that are over $1 billion, and we also exclude companies that have been acquired, like Tessian, which was an Accel portfolio company. So I'm thinking about Saria, Mistral, 11 Labs. All those names are names you probably know very well and use in your day-to-day. Now, if you look at the list, well, we've had to actually expand the GenAI section, and as you can see, the application block is really taking an important amount of room on the slide. So this is really, I think this speaks to the pace of innovation we're seeing in the space. But overall, if you look at that category, it's probably one of the youngest lists that we had at Accel. So previously, companies of the Euroscape 100 used to be around 5 years old. This list, the average, I think, is more around 3 years old. So you basically have an older generation of potentially slower growing SaaS companies that are being pushed out, but that younger cohort of AI companies that are growing faster and reaching faster inflection point. An important data point here is also the fact that these companies are hiring much faster than previous years. So last year, I think the average 1 year growth in employee headcount was around 20%. This year, we are at 80%. So you can really see that those companies are younger, but growing faster. And I will pass it on to Philippe for what's
so
next.
We have 30 seconds to conclude. So in terms of what do we see next, so we see 6 broad trends which we think are going to play out in the next year. I mean, the first one is we think that we're going to see a lot more application based on LLM models going into production next year. This 2024 was the year of testing. 2025 will be the year of deployment. We think that 2025 will be the year of testing for agentic models and workflow. So we expect a lot to happen in this area. I mean, companies like H are expected to release their first product in the next few months, and they're not the only one working on this. So that's going to be pretty exciting. We expect to continue vertical application to be disrupted by GenAI. I mean, vertical application tends to be usually older and they're very prone to disruption, and GenAI can make a big difference there. We think GenAI is going to enable a lot more personalized experience. I mean, we're seeing that on the customer support side with personalized bot, on the sales side with more personalized bot to help you purchase especially complex product, and also on the media side. You know, if Synthesia, which is creating personalized avatar, now you can go there. It's a freemium model. In a couple of minutes, you can create your personal avatar and do your social media video with it, and enterprise obviously have a broader set of applications for this. Then we think that code development is going to be reinvented. It's really going to be moving from writing codes to writing specs. So that's the shift that we expect to come in the next few years. I think a company like Accel, which was founded by Guy Podjani, the founder of Snyk, is really going into this direction and very promising. And of course, everything is underpinned by the data, and therefore protecting your data is becoming increasingly important, and we expect that to be one of the key themes for cyber. We're out of time, so thank you everyone for listening to this. We hope we find it interesting, and there's going to be a lot more in the full report that you can find either on our LinkedIn profile or the Accel.com website. Thank you.
Thank you very much.